webinar will be recorded. Welcome everyone. It's a great pleasure to have you here. We have great speakers today, and they're gonna deepen our knowledge about unit economics. But before starting, let me take a few minutes to give you an update in what we are up to with WeInvest. We've been working a lot the last weeks. And for those who are just joining and are not part yet of the community, we want to let you know more about what we do. So first, today is a very important date for us because we are launching our landing page. So this is the link here. We invite you to visit, and everything about WeInvest in the future will be we'll start in this web page. So we invite you to visit it at weinvestlatam.org. What we have been, just a status update. So we have been working in our nonprofit status, advancing. We are registered as a formal nonprofit organization. Our goal is to foster the community of women investors in Latin America, investing in Latin America. And we have incredible sponsors. I will talk about them later. It's Microsoft and Puente Labs, and we are very proud that they believe in our cause. So we have 3 types of memberships in our directory. We have investors, aspiring investors, and service providers. The 3 types of membership will be shown in our landing page. And please remember that you have only the investor access members can view the directory. We have an updated application form, so we invite you to fill it so we can further give value to our members, and you can access it directly from our landing page. We are moving to Slack to centralize all our communications from now on, moving forward. So we will have a 5-minute how-to webinar so we can get started, and all the news, all the advice, all the resources will be hosted there. We will keep the WhatsApp, however, the WhatsApp group for communications, and it will be alive until we can all move to Slack. Of course, we will continue hosting our events, and as we will collect more data, we will be able to add more value. We have great news that we have Barbara Hartneck, who's there. Say hi, Barbara. She has joined WeInvest as a project manager. So we are very, very happy to have her help us broaden our scope and take us to the next stage. Barbara has a degree in business administration from the Universidad de Buenos Aires, UBA, with several postgraduate degrees in corporate marketing, social project management, and conscious leadership. And she specializes in triple impact of business. She developed part of her professional career as a consultant on sustainability strategy and communication. She has experience in brand management and coordinating multi-sectorial projects. In the social sector, she has been the executive director of the Unión Argentina de Jóvenes Emprendedores. She was part of the Sumatoria team, a microfinance platform, and a volunteer in several NGOs. She joins our team to continue professionalizing the community, help expand it, and generate synergies so that our work at WeInvest has the greatest possible impact. Welcome, Barbie. We are very happy to have you.
Thank you, everyone. I'm so happy to be here and joining today, at least to know some new members. Happy to see some friendly faces that I've known for a long time already, and I expect to be able to give my best to this great organization. So thank you.
Thank you, Barbie. You all will hear a lot about Barbie in the next times. So, as I told you, our main sponsors are Microsoft and Puente Labs. Thank you very much. They all make this possible. So, today we have our great speakers, Sol Bertelhofer, okay, and Eric Pérez Grobas. Let me tell you a little bit about them. They will introduce us to the unit economics. Sol holds the role of principal in Jaguar Ventures, an early-stage venture capital firm that invests on digital-focused companies in Latin America. Previously, Sol served as administration and finance manager in an e-commerce startup, providing support in partners. Pardon? Providing support in partner decision-making processes, as well as in the analysis of new projects. At the insurance company Zurich in Argentina, she collaborated as a senior analyst for planning and management control in finance area. In addition, as part of the company, she participated in volunteer programs for almost 3 years, helping children in vulnerable social and economic situations and young people in search of their first job. She's an actuary in economics from the Universidad de Buenos Aires. Sol also has a master's degree in finance from the Torquato Di Tella University. Welcome, Sol. Thank you very much. And Eric Pérez Grobas, just married, is the co-founder and general partner of Jaguar Ventures, an early-stage venture capital firm, the same that Sol. He's also co-founder and president of the Mexican Association of Online Sale, AMBO. Eric is currently a board member of Walmart Mexico and Latin America, Confio, Ben & Frank, Nexu, Kinedu, and Viajamex. He also provides support to entrepreneurs, such as mentoring at Endeavor Mexico, who named him as one of the top 5 influencers in digital entrepreneurship in Mexico, and was also named by BBVA as one of the 33 most important Mexican innovators. He holds a bachelor's in industrial engineering, summa cum laude, from the Instituto Tecnológico de Monterrey, and received an MBA and MPP from the Stanford Graduate School of Business. Eric's internet experience began in 1999 when he opened and led Mercado Libre Mexican operations. He also worked in consulting at McKinsey & Company and Bain & Company, and held management positions at Cemex and Satmex. He actively participates in nonprofit projects, serving as board member of CMR Foundation and as a young leader for sustainable cities. Thank you very much both for being here today. So all yours. I hope that we will have some time at the end for questions. Thank you. Go ahead.
Thank you. Well, thank you, Silvia. Thank you, WeInvest. Well, hi, everybody. I think that, well, most of you, I think that know Eric and I, but well, it's a pleasure for us to stay here. Like Silvia mentioned before, Eric and I are part of the Jaguar Ventures team, venture capital fund that invests in Latin America and early stage startups. So we are very happy to share our knowledge or our understanding about this topic of unit economics. I will share my screen with the presentation. So, well, I don't know, Eric, if you want to start.
No, thank you very much. It's truly an honor to be here. I think many of you know how deeply important for me it is, in all honesty, to be as useful as possible in helping the women in the entrepreneurial world, and who could be more important than the women investing, because I think it's highly demonstrated that when you have women making decisions, we make much better decisions. I started learning unit economics from my mother. Every time we would go to the supermarket, she would stand in front of a board. I still remember that board, in which it would set what was the price per kilogram of jamón. And every week she would decide which jamón we would buy based on the cheapest one by kilogram. And from there on, I have deeply ingrained the importance of unit economics. That being said, we are very fortunate that we are partnered with Sequoia in one of our investments in Nubank. And because of that relationship, we have been able to learn from them. And something that they have taught us is that they look into three things. They look into how impressive the entrepreneur is, they look into product market fit, and they look into unit economics. And we try to emulate that. That being said, one favor, we believe it's more useful is as you have questions, you ask them. You can either put them on the chat and we will be trying to look into the chat, or you can make them every time we finish a slide. But please, if you have questions, please do them. Go ahead, Sol.
Yeah, thank you. So, well, to start with understanding unit economics, when we think about the presentation with Eric, we think about a scale, because we think that in one side of the scale we can find the revenues, the direct revenues per unit or per customer for a company, and in the other side of the scale we will find the direct cost associated to this unit or to this customer. So the question, we as investors, I think that all of you are familiar with the concept of unit economics, but we always try to look that for positive unit economics, and we know that they are important. But well, the thing is to look to this scale and see if the weight of the direct revenues are higher than the direct cost. So as Eric mentioned before, we also think that the concept of unit economics is highly correlated to the concept of product market fit, because when we measure product market fit, we are looking for exponential growth in the revenues of the companies and retention rates. So we think that if we have a proven product market fit, we also have we will see it reflected in good unit economics. So going forward, it comes to think about how we track unit economics and how we measure the unit economics. So we first think in our first line when we analyze unit economics will be the revenue how much the company is charging for a unit or for a customer. So we have this first line, and then we will have the direct cost. We have to be aware that this direct cost include all the elements that will be affecting the sale of every single unit of product. So I would like to before going deep in all these elements of the cost, I would like to introduce the concept of lifetime value. When we think about lifetime value for us, for example, for Eric and I, it's a controversial concept for early stage startups, because the lifetime value is the revenue that a customer will generate over the life of over the relationship with the company. And we think that for early stage startups, it's been difficult to define or to find out how much they are going to generate in the future. So we think that the typical customer of an early stage startup is like a baby, because you don't know nothing about her future life, or how long her life would be, or how her life is going to evolve. The same happened with the lifetime value of the customer of an early stage startup, that you can have estimations, but you don't really know, you don't actually know how much the customer is going to spend in all her life, or how many purchases he's going to make, or if you have a retention rate, you can estimate it, but you don't have accurate figures. So in the other side, you have like the typical customer of another kind of companies. Like, for example, we think in Walmart, that it is a company that we think that it's able to estimate much more accurate the lifetime value of their customers, because they know much more about the life of these customers. They know how many times they have gone to the supermarket. They know how much they have spent in all their purchases. They know about the recurrence of their purchases. So they have much more information to reach a much more accurate lifetime value. So that's why for us, it's a bit tricky to use the lifetime value as a metric for analyzing unit economics. I don't know, Eric, if you want to add something here. I think you're mute.
Sorry about that. No, very quickly, we don't use it. We don't use lifetime value. We don't believe in lifetime value. But we understand that some people find it useful, but we don't.
Perfect. So now, yes, we want to go over the direct cost that we should include when we analyze unit economics. As I mentioned, we have to be aware to include all the direct costs that are related to a single sale, to a single unit or a single customer. So we are going to start with cost of goods sold. Eric, I think that you have some examples also from our portfolio companies.
No, normally what we like to see is things that are easy to understand. I remember once at Stanford, I was fortunate to have as a guest in one of the classes I attended, Warren Buffett, and he said we avoid complicated businesses, and this is a guy that invests billions and billions of dollars, and that was very impactful for me. Basically, he said, if it's not easy for us to understand the logic of the business, we would not invest. And we have tried to follow that thesis through our investment decisions. That being said, it's not always that easy. So on one hand, we have a company in our portfolio as Ben & Frank. For those that don't know it, Ben & Frank is a Warby Parker copycat in Mexico. They sell prescription fashion glasses, and actually one of the co-founders is an amazing woman entrepreneur, Mariana Castillo. In that case, it is relatively easy to understand what is the cost of goods sold by Ben & Frank. But on the other spectrum, we have a company as Melon. Melon is a Colombian company that provides the logistic service for a small and medium e-commerce. And in that case, you can look at the unit economics from different perspectives. You can look at it from every package that is managed by Melon. What are the cost of managing that particular package? On the other hand, you can look at as full clients. You can go and say, let's look at all the clients that Melon has, and let's try to understand how each client would cost serving on a monthly basis. But and depending how you look into it is how you are going to end up making the decision. So it's very important that you try to understand, and we're going to talk later about learning from the entrepreneur, but sometimes it's not as simple, and you need to be able to see different perspectives to really have a good understanding of what the cost of goods sold is.
Great. So moving forward, we also have to consider another cost that we have to consider in unit economics is the logistic cost. It happens mostly in, for example, in e-commerce startups or marketplaces that should consider the delivery cost in their unit economics. Also, the transactional cost.
So, sorry, before moving forward, in logistics,
sorry.
it's also very important. Sometimes it's revenue. For some startups, the logistics can be revenue. On the other, and sometimes it can be marketing cost. Many times in e-commerce, you will discover that a lot of e-commerce startups will give shipping as free to allure potential clients. And in that case, for us, we would consider it as a marketing cost because it's something that they need to do to attract the customer for the first time. So it's very important in the case of shipping, not only to do consider it, because many times the entrepreneur will not show it to you, but second, to understand where should you put it. Is it revenue? Is it a direct cost on everything? Or sometimes it can even be a marketing cost. So just be sure to include it and to know where to put it. Just to remind you, if you have any questions, feel free to put them in the chat so we can start taking them, or also feel free to raise your hand as we move forward.
So another cost that is always considered in the calculation of unit economics is the financial cost or transactional cost that the companies always have when they make a sale. For example, the payments to pay the percentage that they have to pay to payment platforms or to credit cards. So it's important to not forget about this kind of expenses that are directly associated to the sale.
Sorry, and similar to logistics, sometimes it's also very important if you should or not include this as part of customer acquisition cost. And let me tell you why. In Mexico, for example, you have meses sin intereses, months that companies will tell you, we will charge you every month for 12 months. That has a cost for you. But there's one that it's even more important, which is the client transactions. Unfortunately, in Latin America, we have evolved significantly, but we still, compared to the world, have more rejected transactions than we should. Some should be rejected because they are fraud and you want to reject those. But sometimes it's true customers that want to acquire from you, and because you have a deficient payment platform, you are rejecting them. That goes directly to your acquisition cost. Why is that? Because it already cost you to get this guy to try to buy you. If you are not accepting him, you are significantly increasing your acquisition cost. So in transaction cost, also be mindful if you should consider them or not sometimes as part of customer acquisition cost.
Yeah. And then another cost that that we have to pay attention to is if we have some revenue share agreement, or if we have to pay some commissions to any partner. So to be sure that this part of the revenue is not going to be part of our final gross profit. So this is something that we should include also in the calculation of unit economics.
In addition to the analytical part of the of doing it. There's also always in these cases, you always need to ask yourself how sustainable it is, because many times what you end up discovering is that the startup is growing only because of this type of relationships, which is not bad. For example, let me give you an example. We still have a tiny part, but we still have some in a company called Connecta, which is a payments platform. Connecta was able to be extremely successful because they were the payment platform of Shopify. And that was amazing, because at the beginning, if you wanted to use Shopify, you had to use Connecta. That being said, moving forward, what happened is what it was obvious was going to happen. Shopify started including other payment options, Mercado Pago, their own payment platforms. On the other hand, Connecta very quickly also started adding other alternatives, such as OXXO. That being said, the unit economics of OXXO versus Shopify were different. So always be mindful of, when there's a revenue share, how sustainable it is and how replaceable it is. Because if they're going to have to replace it, a lot of times it's going to be with a more expensive replacement. So just be mindful of that.
Right. And then finally, well, we have this cost of bad collections that we commonly find it in fintech companies. And sometimes it's difficult to estimate this kind of cost, because in early stage companies, they probably don't have a long track record to know if they are going to have bad collections or not, or if they are having fraud or not. So what we have seen in some fintech companies is that they estimate a percentage of bad collections that they included as a loss in their unit economics. But it's an important point to be aware of, mostly in fintech companies.
I always have to smile when I see a fintech and they tell me, we have no bad collections, all our customers pay. And at that moment I say, I know that they are either lying or they are tiny. Because if you are a fintech, you have bad collections. And I want them to have bad collections, because that is what teaches them how not to have bad collections in the future. Because if they don't have bad collections when we invest in them, I know we are the ones that are going to have to burn that cost. I want them to know about bad collections as early as possible. And on the other hand, I also want them to learn how to be able to reappropriate the whatever they can. For example, one of our best investments, it's one that finances cars. It's very, they have many times to recollect the car. And I want to understand what is the cost of that, including in what percentage they can reclaim the car and in what percentage they can't. Sometimes they can't. So also be very mindful of that. And also, go ahead.
Thank you. So now moving forward, we would like to talk also about the customer acquisition cost. That here, well, of course, is important to have an accurate figure of how much does the company is spending in the acquisition of new customers. And here we have to be very we need to have a deep understanding of all the channels that the company is using to acquire new customers, because sometimes not all the marketing expenses are included in the unit economics. So we have to be aware that they are including, for example, online campaigns or physical campaigns, social networks, marketing agencies, the sales team, the marketing team. So we need to be sure that they are including all the expenses associated to the acquisition of the customer. And also what happens sometimes is that for us at least is a red flag when the entrepreneur says that they don't have cost of acquisition for a new customer, that their CAC they have zero CAC. We know that sometimes it could happen in a very specific moment that they are not spending money in marketing, but for us, it's super important that the entrepreneurs understand every single cost or every single time or resource that they dedicate to acquire a new customer. So we, for us, we don't feel so comfortable when they say that they have zero CAC. I don't know.
And similar to what we were talking about, the cost of reclaiming products, sometimes it's true. Sometimes at the beginning, it's easy to get clients, no? Because there's always the early adopters in which they are reading the technology section of Reforma, a major newspaper in Mexico. The problem with that is that there are 10 guys like that. So if they have not moved beyond those 10 early adopters, they really don't know what the customer acquisition cost is. And also adding into customer acquisition cost, something that we see many times they do not include is the cost of the call center. At least in our case, we have several companies in which eventually a call center has to get involved to close the transaction. So it's unavoidable. Not something that we like, but sometimes it's like it is. And they don't include it. And they have to include it because it's part of acquiring the customer.
Great.
Sorry, Eric, Sol, Marta has a question here in the chat. Could you put in black and white the most important different unit economics for B2B and B2C startups, especially in SaaS companies? Is it the right time to address this, or
no, of course. Sol, do you want to mention something? Or?
Yeah, of course. Yeah, I think that well, yeah, just to start the conversation, I think that in B2C, sometimes what we have seen in B2C is that it's a kind of easier to estimate for example, the cost of acquisition than in B2B companies. So yes, they have different ways of estimating the gross profit, and perhaps is sometimes more clear in B2C business. But and regarding SaaS, I think that we always try to look for additional metrics that then we are going to talk about, like for example, retention rates or churn or analysis by cohorts that are super important in this kind of business. But Eric, if you want to,
the ones that come to my mind is, in our experience in B2B, humans are more involved because while in B2C it's easier to convince an individual. In B2B, at least in Mexico, there's a cost of humans, of salespeople, and many times that is not included. Also in B2B, well, no, it's not true. I was going to say that in PR, but B2C always has a PR. In the case of SaaS, the problem with SaaS, the one we have seen, more than unit economics, is estimating the true potential size of the market. And the reason for that is what has happened to us is many times these SaaS companies are able to gather these customers that we were talking, the early adopters, the ones that want to have a more efficient business, and therefore they are willing to move forward instead of using Excel to go and buy something that is more sophisticated. But the problem we have encountered, at least, is that many times those early adopters are the only ones really willing to pay that extra cost. When they try to move forward, particularly the small and medium companies, they are very conservative, and they rather continue to use either their bad solutions are using Excel, or sometimes then they make the jump to something more sophisticated from an American or international vendor. So it's always more for us a challenge in how really big can this get. And the other thing in terms of unit economics in SaaS for us is the freemium part. Many times you will find that they have a large customer base with a very small revenue, with the promise that it is going to increase. And the problem is that many times never happens. So that's why we don't, it's part of why we don't believe in lifetime value, because we don't see that jump happening, and they always stay in the freemium phase.
Thank you.
So moving forward, well, related to what we said about CAC, we think that an important metric is the CAC payback. So how much time we need to spend to recover the investment the company made to acquire a new customer. So this is a very important metric that we always see, or we ask for the entrepreneurs, because it's, for us, for example, it's much more important this kind of metrics than, for example, well, the LTV to CAC ratio or something like that.
Sorry, now that I see this slide, I forgot something very important that I had to mention before. And it's in the case of Fintech, it's crucial to understand their cost of acquiring capital to lend that money. Because many times that is the difference into having a successful or not successful business, and also trying to understand how possible it's going to be for them in the short term to really access low cost lines of credit. So that is also from our end very important in the unit economic analysis, that the cost of credit lines that they can use to then loan that money to their consumers.
Right. So here, Eric, if you want to talk about it.
So in the end, many times we get it wrong, most of the times. So what we have learned is to listen to the entrepreneur. Many times we do the analysis and we believe we understand and we don't understand. So an advice for everybody is listen to what the entrepreneur has to explain you, because nobody understands their unit economics better than them. It is true that many times they are salespeople and they are going to try to push you the nicer unit economics without the customer acquisition cost, without the call center. But many times they are going to show you ways of understanding that you didn't understand. And let me give you an example, speaking with Sequoia about Rappi. I remember speaking with them. For them, it was an amazing investment. And it was one that we let go. I was stupid enough to not invest in Rappi at the time. And the reason was the unit economics. And until I spoke with a partner in charge of Rappi in Sequoia, and he told me, you got it wrong. You got it. And he explained me, instead of having looked into it as a per model cycle basis, you should have analyzed it on a 10-block radius. And he made the numbers. And in all honesty, I'm still not sure if Rappi has positive or not unit economics. What I do know is that they had a way of explaining them that I was not able to understand. So my advice for you is always, always, always try to understand the point of view of the entrepreneur, that they have much better understanding of how the unit economics should measure that what we can.
Right. So moving forward, we another concept that we would like to link to unit economics is the speed versus efficiency. So because sometimes we see that there are companies that that prefer not to increase their marketing spend or their cost of acquisitions, but they are not growing at a faster pace. So we think that sometimes in early stage companies, sometimes they need to sacrifice some points of their margins to spend more in acquiring new customers and have the possibility to scale exponentially and at a faster pace. Yes, so this is like they need to find like the equilibrium between efficiency and the speed of growth, but it's something that it's always linked to also to the unit economics. And then other concept that we mentioned before is the cohort analysis, that it's super important when the company have like a bit of track record to ask for this kind of analysis of cohorts or on the churn rates or retention rates of customers, because we think that if we see an improvement cohort after cohort, it should be also reflected in their unit economics. If we see that they are improving the retention rate, they should probably will be able to have lower cost of acquisitions. So I think that this analysis should be made all together.
So, excuse me, can you explain a little bit more a cohort analysis, please, or an example?
Yeah, of course. So when you analyze cohorts, you will have the different customer. For example, here this is an example. They are not actual figures from my company, but you have the clients that or customers that you acquire in each month of your operations, and how the percentage of retention, or in this case is the percentage of churn has been evolving. So you expect that cohort after cohort or month after month, or the new clients that you acquire month after month show better figures. So you expect that the churn rate would be lower, and that you are able to have to improve your strategy to retain more customers along your life.
And there's a question, and I will answer it right now. So Jasmine doesn't think we won't answer. I will. Very quickly, in cohorts, what you also want to take into account is how realistic the entrepreneur is in understanding what elements of the unit economics will improve and which will not. And let me tell you one that will not improve: customer acquisition cost. Every time we see an entrepreneur, they show us their unit economics and how they believe it's going to evolve, and they tell no, and as time moves forward, we're going to be able to lower the customer acquisition cost. That's not true. Take an investment we have, Payback. They do television ads right now. They are paying Checo Perez, a Formula One driver, as a sponsor. Believe me, those are not cheap things to do, and it's okay to do them. It's also okay to move forward from very efficient Facebook ads to have to move into less efficient Instagram ads. It's how it is. So my only advice is, in unit economics, be very mindful of what the entrepreneur tells you is going to improve and what not. And with time, you will start better learning which will improve and which we will not. Now, very quickly, in the question of Fintech startup from Jasmine, how to measure the cost potential of a startup in a highly regulated industry? Great question with a terrible answer. We don't invest in fintechs believing they will move out of Mexico. and therefore we believe Mexico should be enough for us to be an amazing company. And look, Confío has not moved out of Mexico and it's already a unicorn. Sometimes they will, but it should not be what you need them to do, because it is true. It is extremely difficult to move into highly regulated industries. And therefore, what we like is to believe that in the market that they are already, it should be enough for us to be successful as investors. If it happens that they can move, amazing, but we don't want to count on that for us to make investments, because it is extremely difficult to move, because what you correctly say, Jasmine, they are very highly regulated industries.
Great. So, well, I think that we don't have so much time, so we have some final thoughts on unit economics. And our first thought, it's related to the market. We think that analyzing unit economics is also related to the size of the market, because although you have like positive unit economics and super healthy financials in the company that you are analyzing, if you have a small market, this company will be super limited to scale up and to be a big company. So it's important always to put in the scale that or if you have these healthy numbers, these healthy figures, also it will have to be linked to big markets to have the possibility to scale exponentially and to have the possibility to build a big company. And Eric, if you want to
the next one, because we want to run out of time.
The next one. So, yeah.
I don't know. I'm sure you do as women, but we as men, we have phrases to define our own stereotypes, and I hope we do it. And when you are young, you have phrases to describe the guys that are good with girls. And we have a verb that it's called Verbomata carita, which it means if you're a good talker, you don't need to be handsome. And that was true. Every time you saw someone that was very good with girls, normally it's because they had an amazing verbo. And in the end, verbo mata unit economics. And I'm gonna bring again Rappi. I didn't got how good, well, no, I got how amazing salesman Simon was. And I should have looked into that. But because it's true, Rappi doesn't have, I have no idea how they are right now, didn't have the best unit economics. But Simon had the ability to get the money required to grow a business to sustain bad unit economics. So always be mindful of this. If you have an amazing salesperson in front of you, you may be willing to be more forgiving about unit economics. So please don't let be the stupid guy I was in letting go Rappi. Be always mindful of the amazing salesman in front of you.
Well, thank you, and we can continue with questions.
Okay, we have a couple of questions here. First, you mentioned that you don't use long-term value. Could you share with us your unit economics analysis methodology? And also, I would like to ask about, you talked a lot about unit economics for the startups. What about your own unit economics as investors? Do you use unit economics in Jaguar Ventures, for instance? And also I have another question here. What about women entrepreneurs about unit economics management? Do you see a difference between women entrepreneurs and male entrepreneurs in unit economics management?
Let me get the last one.
Yeah.
So they are better on managing unit economics, and obviously there's always exceptions. But it's true, no? They are better. They are more methodological. They are more realistic. On the other hand, sometimes they are not as good as selling them, because since they are very good at being conservative and understanding, yes, the customer acquisition cost is not going to be reduced by 1/10 in the next month. Sometimes that's what funds want to hear. So, which is wrong, but that's how we are. You know that. So yes, they are better at managing them, but they can become better at how to sell them, because of their realistic view of things. They don't sell the dream that sometimes they have to sell.
Mm-hmm. And then, well, regarding the first question about how we measure the unit economics, yes, we don't believe so much in lifetime value. What we always do in our analysis is to calculate the gross margin per unit or per customer. We always ask for the information to the entrepreneurs about their their average ticket or average revenue per customer, and then we do what Eric mentioned before. We speak to the entrepreneurs to understand every line of the cost, so we have a deep understanding of how much they are spending in producing one unit of their product, or how much they are spending in producing their services, and with that we reach a gross margin, and we also compare this gross margin with the cost of acquisition, so we can estimate also the CAC payback. This metric, the CAC payback, is super important for us. This is something that we consider for our analysis instead of lifetime value.
And regarding what we measure from our end, the one that we care the most about is money returned to investors over every dollar received. That being said, as you know as well as I do, that this metric starts figuring out until not less than 2 or 3 years once you start the fund. What we do is we are fortunate that we have people that share with us the benchmarks of VC in the US and non-US. And we have the metric of top 5% funds in the world, how much money they have returned per year. So that's what we measure. We in year one, normally that metric is 0. Year one, even top 5% VCs have not returned a single cent for every dollar collected. That being said, as years move forward, you see that metric starting to increase, and that's the one we use to compare ourselves of how. So far we have 2 funds also only. So we for our vintage, that the first fund is vintage 2004. This is also very important because the vintage has an impact. So for 2014, we compare ourselves to the top 5 VCs in the US in 2014 and how much they have returned money, and same was for Fund 2 for 2019. So that is the metric that we follow the most.
And you see differences between the US and Mexico, I imagine, in the time frame. Yes or no? At
the beginning, yes, but we have been, the other day for a journalist, I had to do this analysis for ourselves, and I'm sure you're seeing the same. It's amazing how timing is accelerating in Latin America, which is amazing. But it is moving very fast. For example, for our first fund, it took us 5 years to be able to have our first check with Conecta. In Fund 2, we have received offers literally from year 1. So times are getting significantly accelerated in the region.
Right.
So guys, I sorry, I have to leave. I am so sorry. I had not looked at the time. I apologize.
Thank you very much.
No problem.
Thank you.
Thank you very much.
See you.
Bye.
Thank you, Eric. Thank you.
Gracias.
Thank you.
Bye.
Adiós.
So Christine, do you have a question for Sol?
I have a question. It's more a comment that I'm giving back some advice that Eric gave to me about unit economics. And I think the best thing that he said was the first time he sits down with an entrepreneur, he asks the entrepreneur to share what he or she uses as unit economics first. So instead of going down a laundry list and saying, can you share with me these numbers? He says, first, I want to see what you look at. And so that is it's a reference point, a framework for how that entrepreneur thinks, right? And so you can get an idea if he or she has a really good understanding. And all of those comments, Sol, that you made about how there's so much subtlety in unit economics, you can't just apply one thing. You have to really understand what the industry is and how it's going to evolve. I think you can draw out a lot of those nuances from that very first question and really just see, you know, what does that entrepreneur send to you on prompt?
Yeah.
Yeah, and I think I also have to say
Very
that,
interesting.
yeah, I think, Christine, that's very good, because in my opinion, entrepreneurs are not very good at understanding the unit economics. They tend to be very naive, very optimistic. And so it's a very good test. If you have an entrepreneur who really can tell you the unit economics of the company in a way that you would agree, that's a catch. Yeah.
Yeah, I agree. Yeah, and also consider when you are in front of some entrepreneurs that perhaps they are pro-revenue, so they are just estimating the unit economics because they don't have a track record yet. So also to understand how they are estimating those unit economics for the future, because sometimes they make assumptions that could be so very optimistic, and we have to be aware of this kind of estimations.
Yeah. Any other questions?
Well, I think it was an amazing webinar. Thank you very, very much, Sol, and everyone for the great questions. And that's it. Thank you very much. And we'll see you soon. Anything else to add?
Congratulations onto the website.
Yes, enter to the website and complete the data, because we are asking for more data in order to produce some information around the community, please.
And I think it's important also to know that now, whenever you have a new friend or colleague, acquaintance who wants to join WeInvest, the process will be for them to apply directly in the website. So it will be a little bit more direct. And then we'll see if she will be a full member or an associate according to the questions she'll answer. So hopefully this will be exponential growth.
Exactly.
Bueno, mil gracias. Gracias, Sol.
Muchas
Gracias. Gracias a ustedes.
Gracias, chao.
Chao, chao.
Fin de semana. Adiós. Adiós.